We showed you how you can set up your valuation engagement in one compact set of screens. So now you're ready to review the valuation approaches included in MoneySoft Business Valuation Specialist. BVS includes accepted approaches and methods. This video demonstrates the methods under the asset approach. The valuation approach based upon assets is sometimes referred to as the cost approach or replacement cost approach. The asset-based valuation methods included in BVS are net asset value and liquidation value. They're generally considered to be minimum measures of business value. These methods do not consider the earnings capacity of a business. However, as minimum benchmarks of value, the business is generally worth at least net asset value or liquidation value, even if the income, market, and other approaches yield lower values. Net asset value assumes an orderly sale of assets. Liquidation value assumes a forced liquidation. Even though these methods result in minimum value indications, you still need to calculate them correctly, and BVS helps you do just that. Let's start with net asset value because some information feeds forward into the liquidation value method. Net asset value calculates the value of the business as the market value of assets less liabilities and less any income tax on the gain or loss from the disposal of assets. The market value in net asset value assumes an orderly disposal of assets with an attempt to get the best price for each on a piecemeal basis. Here in the tangible asset value screen, you can make any tax basis adjustments if necessary to tangible assets. The tax basis is used as the starting point to calculate the gain or loss on the presumed sale of the assets. Then you make your market value adjustments to each asset account based on your estimate or based on separate appraisal. The result is the market value for all tangible assets. In the years that followed the issuance of Revenue Ruling 5960, intellectual property and intangible assets have grown in both importance and prevalence. So BVS includes an intangible asset worksheet to identify and value intangible assets that may or may not be listed on the firm's balance sheet and can be valued and sold separately from the going concern. In addition to the asset categories that are included on the worksheet, you have the option to add your own categories. For each intangible asset line that you identify, you enter the book value, if any, and adjust it to bring the value up or down to its market value. This is the net asset value screen, and it's where you work your way to the equity value of net assets. The market value of all tangible and intangible assets is summarized here. The calculated equity value is the market value of assets, less liabilities, less estimated taxes on the gain or loss. You're given a few different effective tax rate measurements here for reference. These rates can help you select the tax rate you want to use to calculate any tax on the gain or loss at the entity level. In net asset value, and in all of the valuation methods, you can enter the indicated equity value, which can be a rounded value. Entering the indicated equity value gives you the control to decide whether or not you want a particular value indication to be included in your valuation. If you don't enter a value here, you're effectively saying that you're not using this method and it's excluded from the valuation. So if you don't want to include a given method as part of your conclusion, just don't enter an indicated value for that method. Leave it at 0. While the mechanics of liquidation value are very similar to net asset value, liquidation value assumes a forced liquidation, whereby the assets will only be exposed for sale for a short period of time. In the liquidation value method, you can also include the estimated liquidation costs, and then the present value of the liquidation costs are deducted from the equity value. You can add line items for different types of liquidation costs, and enter the monthly amount for each cost category and the duration for each. Then enter a discount rate, and the present value of the liquidation costs is calculated automatically for you. Here in the liquidation value screen, Enter liquidation adjustments to reflect the liquidation value for each asset. Then the equity value is calculated as the liquidation value of assets less liabilities, less estimated taxes on the gain or loss, and less the present value of liquidation costs. Again, you have the control to decide if you want this value indication to carry forward simply by entering an indicated equity value to include it, or leaving it at 0 to exclude it. There may be times when you want to arrive at an indication of value for an entire approach. BVS gives you the flexibility to do that as well. To illustrate, we're going to jump ahead to the approach level conclusion section. Here you see that there's a multi-view for each of the three approaches: asset, income, and market. Since our topic today is the asset approach, we'll focus on that level. The approach level conclusions give you the option to select a value conclusion for the asset approach. You can assign weights to combine the net asset value and liquidation value into a single weighted value, and then select the indicated asset approach value that you want to carry forward. This is optional. If you don't select an asset approach value conclusion, then the individual value indications will carry forward. We'll cover the approach level conclusions in greater detail in future sessions. Net asset value and liquidation value under the asset approach are good methods to start with, and BVS helps you calculate them correctly. However, they generally only give you minimum measures of value and don't consider a company's cash flows and earnings generating capacity. The methods under the market approach and income approach are based on earnings and cash flows, and we'll show you those in the next two sessions. The market approach is next. See you there.